Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So yesterday, as you could see, gold market was not able to complete the conditions that we discussed concerning the reverse head and shoulders pattern around 2030 area. So actually it was significant downward action. It seems that actually political factors have appeared to be not enough. It's not strong enough to change the overall direction, and currently the economical factors are dominating on the market, on its sentiment. It's mostly, speaking in two words, investors start review their opinion concerning the Fed. So as we said yesterday, they mostly, and yesterday and actually in the previous few reports, that we suggest that markets actually overvalued the ability of the Fed to start cutting rate in March. So we said that probably will not happen in March. And currently it's becoming, it seems, common opinion that it's a bit too early to expect this. Already, although some expectation in comments, as you could see recently, and also from the JP Morgans, from some other banks, still trying to assure investors that Fed will start cutting rate as soon as in March. But now it seems that, well, less and less people are believing in this. So, and that has triggered demand for the dollar in general. You can see what's going on in the dollar index. Now returning back to our idea. Here is actually, we've got the grabber. So we said that it's a risk of the factor. We have to keep an eye on what will happen. So, and it was clear somewhere in the middle of the recent session, yesterday's session, that grabber will be formed. Grabber itself suggests taking out of these lows. It has not happened yet, but probably will happen soon. This is first moment. Second, we should recall that yearly pivot point stands around 2003 area, around 2000. And as we discussed in the weekly report, that in most cases, as a rule, if market appears to be near yearly pivot in the beginning of the year, it tries to test it. That's why it's very probable that an area around 2000 might be retested with the market, just because the yearly pivot point stands very close. But this is not the only reason. Actually, it might be even a bit lower action. In the current circumstances, it is really temptation to suggest that probably this might adjust performance, and we should get and could get some upward reversal and upward action. But some cross-market analysis makes us think that, well, chances for that stands not very good, at least for now. And here's why. So if we take a look at the dollar index, actually I already have shown this picture in today's euro currency report. Let's take a look. We see that the hand shoulders starts working here. But these hand shoulders might be just a minor part of the bigger pattern. So take a look. Once market will reach the 104 area, we could get larger pattern. Let's take a look. This may become the shoulder, head again, and another shoulder. And we could get even more extended action somewhere to the previous tops of the dollar index. That's what we discussed in our reports through the few months. We said that investors are too early borrowed the United States dollar. Situation really could change significantly here. So on this background, yes, of course, it might be geopolitical issues here, and it might have a different impact on the gold. So euro could keep going lower, the dollar could keep growing higher, but on the gold, it also might be supportive. We do not know that. But at least based on the performance of the dollar, it is difficult to suggest that, well, gold will turn up immediately. So this, and actually performance of the 10-year yields, which is also supportive to the dollar, makes us think that probably currently it is not a good idea trying to catch the bottom. Despite that, on the fall time frame chart, for example, it is possible to see some kind of the double bottom, and it's really also desire or some temptation, as I said. So maybe this will be double bottom. Let's take the position here, and maybe this will get some upward reversal. Well, it's of course not forbidden. So theoretically, you could try. Besides here, actually, it is possible to place very tight stop. It will be very small risk if you will be wrong. But as I said, in the performance that we see on the cross market with the gold performance, here we see some acceleration. We suggest that reversal right here in the shape of the double bottom or any other bullish pattern here, well, not very reliable. So risk of the possible downward continuation seems rather strong. So it is actually higher chances on the downward continuation is better right now than we will get some upward bounce. So more probable that we could get something of this kind. It's really possible that we will get it. So some kind of the ABCD market could form this garter steeple to buy in a way of the long-term upward tendency. So we will get here a bit deeper retracement, and after that market could start upward action. Theoretically, now this scenario seems better by those reasons that I have just mentioned. Besides, on hourly chart, let's take a look how market responds to these levels that we previously were considering, and in general to the channel. So all barriers that have been built here by the market have been broken. So market returned right back down, wasn't able to exceed this level, returned back to this trading range, failed, dropped back down first here, completed the OP, shows minor reaction that we discussed. And now let's take a look at drop back inside of this, in this trading range in the bottom. But it's not all yet. As you can see, it's also stands inside of the channel once again. So this is not really a good sign. It's definitely not the way how bullish market forms, how it shows the reversal. And from that standpoint, I'm a bit skeptical on immediate upward continuation. So this because it doesn't correspond to normal behavior of the bullish market. So yes, we could get maybe some kind of the minor pullback. Maybe market will form here minor hand and shoulders. As you could see, might be formed here with some minor retracement. But I think that, well, it's not enough to suggest that this major reversal market will keep going higher. So this is only could be considered if you're ready for taking some risk. If you'd like to, well, play in these games, you could theoretically try to do this. Minimize your risk. Wait for the wait when the hand shoulders will be formed on the 15-minute chart, for example. Try to take position very small, with a very small risk potential, very tight stop, $3-5 per contract. It might be taken. It's very small risk, and just see what will happen once market started upward action. Move stops to the break even as usually we do, and then just hope that you're right and the market will keep going higher. This strategy, in this way, it is possible to do. But if you're not sure that you will be able to do all this stuff, well, in the current circumstances, it will be better to not consider taking the new longs position, because all the stuff that we have just discussed, it has just more bearish look rather than bullish. So that's what we have from the gold currently. Besides, we have the grubber, we have the yearly pivot point that we have just discussed, and all the point on the drop somewhere in the 1000 area. So that's why it will increase chances that if even we get the pullback, it will be very short term. That's actually what we would like to say about the gold. Let's see what will happen.